Hi, new day, new market. It's Tuesday, 6th of January, and we're going to go over today's movements, the trade ideas that I marked out, but I didn't take any trades today just because the ideas that I had got invalidated, and for that reason, there was no need for me to get in, especially after yesterday's win. So we're going to go over exactly what I was looking at. I was looking at the Dow, the S&P, and Nasdaq, and all of them pretty bullish today. I'm going to go over the Dow first, and then we'll go over S&P and Nasdaq, being that they are correlated. So first thing that I was looking at, so we got pretty bullish movement yesterday, created this massive imbalance here. Didn't quite trade into it on the 15-minute. We got this wick here, and on the 5-minute, this blue box is a fair value gap here that I was using for an initial target short. And we also have equal highs from just before London session and during the Asia session. And we also have this imbalance up here. So straight away, there's three different targets there, three different reasons or ways to look at it. And in terms of my initial trade idea, we marked out the 8 to 8:15 15-minute candle, and I was looking for move down, retrace to the midpoint to go short, to then target this imbalance down here below the London lows, and then ideally look for the move or the reversal back up as we have seen here. But we've got these relative equal highs here, and that is acting as more of a draw than a 5-minute fair value gap. So pretty much when the market opened, I was looking at all three of the different markets, just to see how each was reacting. I was bearish on the day, but I could see reason for price to move up. And I'll get into that as the video goes forward. So in terms of the initial open, we saw very quick retracement and push up above this 8:15 candle. This swept the London high, but not quite the equal highs. And it was similar on the S&P here. So we got this push up going into 9:30. With the retracements going the opposite way to the move down, and same again on Nasdaq. Maybe not as strong, but it was the wicks that I was looking at and the closures of the bodies of the candles. So pretty much what I wanted to do, because I was a bit uncertain and because of the fact that we won the trade yesterday, was I just wanted to wait for the 15-minute to close. And I made this note here: after the push up at open, looking for a 15-minute wick and retrace to target lower or no trade today. So what I was looking for was, big wick to sweep these equal highs, and then the body of the candle to close below on the 15-minute, and then we would enter short on a retracement from that. So it would have been a 50-point stop loss with 150-point TP for a 2.9. And as you can see, 15-minute closed way above and just continued moving up towards this imbalance, and filled that at 10 o'clock. By this time I was thinking maybe a possible reversal, but at the same time, we just got this and continuation upwards. So my decision to not trade was decided pretty much within the first 15-20 minutes of this session. On the Dow specifically, and with S&P and Nasdaq, I had similar ideas marked out. So we've got London low here. We've got this weekly opening gap created on the 15-minute for Nasdaq, which on the hourly is just like a volume imbalance rather than an opening gap. So I was thinking about that and how that would probably reduce probability in a short trade. If we also look at the 4-hour time frame, we are in a bullish model, and I mentioned in yesterday's video that we would be looking to target this buy side here. If price breaks above here, then we can look for a further move up And yeah, so that's what's happened today. In terms of, price action in the moment, if we drop down onto the 5 minute, so we saw this 9:30, 9:35, 9:40, 9:45 candle. So price did retrace down, and you can see there is a little gap right before the New York Open. And, this was another pointer that I used to not enter the trade, simply because if you go on the 15 minute, we were just filling this imbalance, and that was acting as like a little continuation area that I was just like, right. I sort of spotted that a bit further into the session, or within like the first 10 minutes, and I was like, right, okay, so that's reducing probability again. And it was similar on the S&P. We got these 3 candles here. We're trading back down into this fair value gap, and we just get the push upwards again to take London high, previous daily high, and I think, so we had more of an SMT on the S&P on the higher time frame on the 4 hour. You can see, we had clear high here to take. We had all of this liquidity up here, whereas on the S&P, it wasn't as clear, but we do have relative equal highs here, which have now been taken. So what happened next? Well, I was looking at FX Factory, see if we had any red folder. No red folder. We got Trump speaking in the next 50 minutes, which has just popped up now. So that might inject some volatility into the market. Depends what he talks about. Nonetheless, we're going to be staying out at least until tomorrow. So after we got 9:45, 10, 15, 30, the 10:30 candle, we then created this inverse fair value gap. And if you notice, we're above the previous daily high at this point. I was looking for the next closure here on this 15-minute candle coming up to 11 o'clock. If the body of the candle closed below this body here and broke structure, then I would be looking for a further fair value gap to form to then go short wherever it would form, just below the fair value, or below the breaker structure, and the trade would look something like this to target previous daily low, something like that, in line with the previous daily high to previous daily low model. But if we look at this, candle wicks into that level and actually fills this imbalance in line with more of a bullish structure. Put that in fair value gap. As you can see, nice little tap into that. And on the 5 minute, it just wasn't strong enough push down. So buyers were protecting this level here. And from there, we've seen, push back up into the inverse a couple times, small retracement and continuation upwards. So again, no trades for me for those reasons. Now, I think that's pretty much it in terms of my day trading for today. What I was looking for, why I didn't enter. I had clear ideas of what I wanted to see in the market, and we didn't get those, and I didn't trade. So it's as simple as that. You have to keep it nice and simple. Mark out what you expect. If it doesn't go to plan, don't trade. Simple. Say it again. Why not? Simple. So now we're floating above this buy side liquidity. We just have to see. We just have to see how the rest of the week unfolds. We can go on to the daily chart. Maybe we see a Wednesday expansion, take these highs here, or this high, and a Thursday reversal for Friday continuation. I think that's most likely to be the case. We see a Wednesday expansion. And yeah, like I say, that's it for all of these three markets here. On the daily chart, Dow's pushing up like crazy. In terms of my eToro, I closed my position in silver for 60% profit today, which was very nice. It has run a little bit more since then, and I don't doubt that it will run a bit further. So I closed it at what, 71.80, which was just on this retracement around. It's basically, where was it? It's like this retracement around here. So that's that position out, just to reduce some risk there and secure some profits. And yeah, like I say, that's pretty much everything for today. So with that being said, catch you tomorrow.